Before we get started, we wanted to thank Liberty Mutual Surety for sponsoring this episode of Let's Get Surety. Liberty Mutual Surety provides contract and commercial bonds for all size companies and contractors around the world. Liberty Mutual is here for you today, tomorrow, together. For more information on Liberty Mutual's breadth of surety products and solutions, visit www.libertymutualsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining us for this episode of Let's Get Surety. I've got with me today my co-host, Mark McCallum, CEO of NASBP. Hey Mark, thanks for being on.
Thanks, Kat. Great to be back.
I'm excited for our topic today. We're speaking with Ryan Work, President and CEO of Surety and Fidelity Association of America, or SFAA, as you might know them. Hey, Ryan, thanks for being on.
Hey, thanks so much for having me. Really appreciate it.
And we're going to be talking about SFAA, their initiatives, and the current state of the surety industry while we have Ryan on with us today. So, Ryan, before we...
topics to cover.
Yeah, exactly. Well, before we dive into all that, Ryan, can you just tell us a little bit about yourself and your background before you joined the team at SFAA?
Yes, I'd be happy to. So I've been with SFA for just over about a year and a half. So I feel I'm still relatively new and getting to know the industry better and better each month that goes by. Prior to this, I worked for the Self-Insurance Institute of America, which did a lot of reinsurance work. Prior to that, I was with S&P Global on the financial services side, and then about 12 years in Congress with the Office of the Speaker, Ways and Means, and with the Republican leadership. So it's been a winding road, but I'm happy to have landed here.
And you found your way into the surety industry.
I sure did, and from what I understand from all my members is once you're in, you can never get out.
That's what I hear too.
That's true.
Nor would you want to, is what I hear.
Yeah.
That's terrific.
SFA is obviously one of the most important relationships that NASBP has, and we have so many common interests and so many things that we work on. But it would be great to kind of just give us the lay of the land on maybe a little background about SFAA and then kind of what your current priorities are.
Sure, no, and we very much appreciate our partnership with NASBP, and I think we do a lot of good work together from advocacy and education and just the way our members interact, and especially even on our board level. So, SFA has been around for over 100 years. It's very much a legacy institution. It's seen a lot of changes and good, recently a lot of great growth in terms of the industry. And I think that history has helped us not only with data, but in continuing to grow and kind of seeing where some of our trends are. Right now, I think there's certainly challenges, but I think there's a lot more opportunities. And we continue to focus on member education, on advocacy. And for me, those boil down to three kind of key pillars that we currently have, which are talent, building our talent pool across the industry, right? But on both of our sides. Data, leveraging data to help make better decisions. And then part of that too is technology, right? There's so many advances in technology. AI always comes to mind, and I've talked about that before, and how we can leverage those three things together to do better risk management, to look at trends, to help our members continue to look at opportunities moving forward.
You mentioned data, and I think, kind of a unique characteristic of SFA is that you really are a statistical organization. Could you tell us a little bit more about that?
Yeah, we serve, we're a little bit unique in terms of member associations because we're not only basically part of the regulatory regime, but we also, to your point, Mark, are a statistical organization, which means that we collect a lot of data that we're continuing to look at to help evaluate more and to slice and dice that for our members. Mm-hmm. And we have that historically, and we're always kind of looking at more ways to leverage what we have because there's a lot of data out there, and the more data we have, the better. But that's I think one of the most important parts of our role within the industry.
And a lot of the data is so critical because you really are taking a snapshot of the health, or at least the position of the industry, right, on a regular basis. Right. How do you do that, and what kind of things do you produce in that regard?
So we continue to get data from a number of different sources, most importantly being our members, almost like a self-reporting mechanism. And so we're looking at everything from loss ratios to one of the most important figures, which is premiums, and both how that's operating in the public and the private sector, and kind of what projects are going on there. And so we release obviously year-end data, which it's funny, members literally will wait at their desk sometimes to see what we come out with. And then obviously on a quarterly basis. And we try to collect that data as quickly and efficiently as possible, but also knowing that there's a lot of, my team does a lot of work on this. And one of the things I'm proud of is we've actually increased our data team at SFAA to help continue to build that up, knowing the opportunities that exist there.
That's great.
Yeah, that is really good. And you have so much important data, that you're gathering from your members. And then in terms of how you present that, is that something you do on a regular basis? And what form is that in reports?
Right now, we submit that mostly on a quarterly basis and then some other data interim. We try to do that regularly, but the other thing we're trying to do is utilize that to look at other things that SFAA does. So one of the capabilities that we've had in the last year or so is to take our EY study from a couple of years ago, which shows the economic importance of bonding, along with our own data, and then leveraging that for advocacy. Because as a former Hill staffer, one of the most important things you can do from an advocacy perspective is use data, right? We all can talk about stories and how we're doing good things, but one of the things we've been able to do, and we did it for our joint fly-in this year, was put together state data sheets, state-by-state basis, looking at how much taxpayers have saved due to bonding of public projects. And that's something I'm very proud that we've done, and we're going to continue to do that and look at other opportunities to basically make advocacy a data point, because that taxpayer funding on the public side, but also risk mitigation on the private side, continues to be extremely important.
Yeah, that was such a great addition to the joint fly-in, being able to have those numbers specifically when you were going in to meet with either the staff or the congressman for your district, to have those specific numbers related to their constituents.
It makes a big difference, and I think when you walk out of those meetings, that's an impact. We can leave behind talking points, but I think having members of Congress and their staff they can go back to their districts or their states in real time and say, hey, look, I'm supporting bonding, and this is why, because it saved you, people of Texas or California, $137 million over the course of the last year. And that's a big number. And I think it also shows the importance of our industry and the role that it played. Because I don't think a lot of people, unless they're in the infrastructure and construction space, truly understand the importance of bonding in each part of that process.
That's so true. Yeah, it seems like very few people understand or know that surety's there, and then if they do know, they don't necessarily understand the value of the surety product.
Right.
So being able to highlight that.
One of the things I continue to tell people, and that's the importance of our joint legislative fly-in, which will be in February of next year, is that your worst enemy on the Hill is a policymaker who doesn't understand what you do. Because that's when they make decisions. That's when they make negative decisions, because they don't have that awareness. And so the best thing our joint members can do together is go in and educate staffers, whether they're experienced or whether they're brand new. And we're always going to have that challenge. But I can't stress enough why that's important, that we go in and continue to kind of beat the drum on the Hill and with federal agencies.
Yeah, I love the fact that it's not just kind of overall industry data, that you're making it very specific to that particular congressional's office, own interest in the state or the district. Right. And that's so important.
Yeah. Because they only care about, they like data, but they really like data that they can go home and talk about, right?
Exactly.
Right. Yeah. Very meaningful to them.
Correct.
So tell us a little bit more about the legislative fly-in, and just maybe from the 50,000 foot level, why it's important to be there on an ongoing, regular basis.
Well, one, and Mark, you're really well aware of this, is I think our legislative flying continues to grow because our members see value in it. And I think, I was really impressed by the fact that we had over 140 congressional meetings last year. That's pretty amazing, right? That's a lot of meetings in a single day. It's kind of a little bit mind-blowing. Right. But, I'll go back to my previous comment that education on advocacy is so important, right? And it's the breadth of our industry. They need to, one, know about it, because it's important that they know our role, particularly in public infrastructure, financing, and risk management. But the fact is that we help produce jobs and revenue on the local, state, and national levels. And that education's key, but also having important policy priorities, right? Whether it's whether it's our water infrastructure bill to ensure that water projects continue to get bonded, that they understand, the state and federal Miller Acts, right? Because this isn't, while I've talked about federal issues, this really goes across the board. It's the federal and the state side, because we're seeing proposals, good and bad, all across that board. And so that advocacy piece, that education is incredibly important to the future of where we're going.
Yeah. Well, and they're dealing with a lot of issues, each office, right? So those issues are competing for attention, I would imagine. As chief of staff for an office, how did you prioritize the issues? Wasn't it more important when a constituent came in front to talk about something that was important to them?
That's a great question, Mark. And I think offices tend to look at things differently, right? Staffers know their boss's personal interests. They go down to their districts and states about what's part of their economy in the state matters, whether that's agriculture, whether it's industrial jobs, construction jobs. And then it also is important for their committees of jurisdiction. So obviously, if you are on the House Committee on Transportation Infrastructure, you're probably going to care a lot more about our issues than somebody who may be on, agriculture or one of a different type of committee, right? And that's where our focus is. I mean, we want to go and talk to as many members and staff as we can, but you can only do so much. And so it's very important to go in and talk to those offices where they have jurisdiction kind of over your issues on the House and Senate side. And we have about 4 or 5 committees that we really care about, that really are our focal issues. And and one thing behind that, we just in the last year on the WIFIA water infrastructure bill that we're jointly advocating for, we have more co-sponsors through September than we did the entire 2-year cycle before. So I think that's a very good sign that people are understanding our issues and that the advocacy is making a difference.
Right, that constant presence and explaining, and then having that incredible data that you can provide about what it means in that state.
And then going back and back and back, so they understand that you really want their support. That's part of it too.
Repetition.
A lot of people talk about, shoe leather on the Hill, and that's incredibly important. I mean, both in person, but also virtually. And so, those relationships, once you establish them, are very key to where we're going, I think.
Yeah. What are some of the other federal priorities that SFAA has? And
I think it's continuing to look at the Miller Act. And one of the things that I've noticed more and more are the federal agencies. And one of the challenges that I think we have is there's not uniformity across the agencies in terms of bonding. And so what the Army Corps of Engineers does versus, we've had recent discussions with CMS and even FERC about how they're going about bonding different types of programs that they run. And just like Congress, there's a lot of misunderstanding about that, but also there's such a patchwork of laws, and we see that on the state side too. Yeah. But some of those federal programs, they're huge. And a lot of times the challenge has been finding the person within one of these massive federal agencies who actually is responsible for bonding. And it's like finding a needle in the haystack sometimes.
Right. Got to do a lot of digging, correct?
Correct, yeah.
Well, you mentioned the use of data on the Hill and how we're able to employ that to help hit home the message about the impact of the surety industry. But then you also mentioned that a lot of your members wait for the reports to come out on a quarterly basis. What's the information that they're waiting to see when the reports are coming out?
Well, I think the key parts of it are premium loss ratio, the dollar loss claims, and the trends that we're seeing. Because I think different companies, it's fascinating. We talk to member companies about, well, hey, we just came out with Q2 data. What's your experience? Does our data jive with what you're seeing on the ground? And a lot of times it does, although different sureties see different things, right? They may see differences in premium. They may particularly see differences in claims, right? Because one surety may have a big claim, another may have very small ones. One of the interesting things in our Q2 data that we've released over the course of the past month or so has been that the loss ratio dropped from about 23 to down to 16%. And,
oh, wow.
And that, that's just related to the experiences that we've seen in Q2. That doesn't mean that loss ratio won't go back up to 22 or 23% in Q3 or Q4 as we see different types of claims coming in. And I think that's a fascinating part of our data. Plus, they also can see where all the sureties are. So there's kind of a competitive thing going on there as well.
We like that loss. Yeah, data going in the right direction.
Yeah,
so that's good.
Yeah.
What are some of the other takeaways you've seen in Q2 results?
Well, so interesting. I mean, we've had an 11% year-over-year increase in premium, which kind of goes with where we've seen the industry, right? So we've seen, I think we're at about $5.8 billion in premium through Q2. So we're on, if we continue, and I'm not saying that's going to happen for the rest of the year, but that would be a record over what the 11.2 billion we had in 2024. So we've seen that continue to increase. Like I mentioned, the loss ratio ticked down in a fairly significant number, which I don't know if that tells you really anything that's going on in the market outside of those big claims are not coming in. But I will say that the dollars paid out were, I think, higher than anything since about 2000, but the second highest is 2005. So just through Q2.
Is the increased premium that you're seeing in Q2, is that spread across the top 100, or is it concentrated, or
I don't know if it's spread across all the top 100 or specific quadrants of that. I'd have to take a look at that data. I haven't seen some of those specifics, but I think it tells you the experience that folks are having. And I attribute that to, while we have challenges going on, and we can talk about that like tariffs, I think we're still seeing an influx of federal infrastructure spending, state infrastructure spending. But one of the things that we found out as we were looking over data the last couple of months is since 2020, private sector bonding has actually outpaced public sector. So public sector premium has grown about 51%. Private sector has gone up 65%. And I think that's really important because we can't just rely on public infrastructure funding, because that may not always be there, or at least to the extent that it has been because of massive infrastructure bills. And so I think that's an important point, because that private sector growth is critical in terms of balancing out where the markets are, where hard markets can go, and the uncertainty over government funding. So I that's one of, I think, the figures that really struck me, is the balance that we're having, at least right now, between the public and the private sector.
I mean, I love to hear that, and it'd be interesting to find out what that what's attributing or contributing to that. Whether it's just private entities becoming more aware about the product, or is it uncertainty about the economy, and so they want to mitigate their risks through bonding, or a combination of all the above. But SFAA undertook, I think, a seminal study, the EY study. Could you talk a little bit about that and why that was important for both public and private owners to understand?
Yeah, so I think it's about 5 years old now. And by the way, this week, we're just about to kick off an undertaking to redo that study and update it.
Oh, that's
great news.
After 5 or 6 years, I mean, as we all know, our industry has changed incredibly since 5 or 6 years ago. And so we're hoping that the new EY data that we get over the course of the next year or so as we undertake this updated study will provide a better snapshot of where we are. But Mark, to your point, so this EY study, for folks who haven't seen it, is really about the value of bonding, what it means to owners, the fact that they're seeing, to our private sector talk just now, that they're seeing a need for it, right? It gets them through uncertainty. It gets them through better risk management. And I think it's interesting to me too that we've seen that increase basically since COVID, that maybe COVID turned on the light to the private sector that they need to be more careful about how they manage risk, and the surety is a part of that as we build on more infrastructure, right? And so that EY study data has helped give us the formulas to then input our data and put out things like the state infrastructure sheets that we've been talking about. So
yeah, that's great. If somebody wants to go and see that study, where could they go, Ryan?
But it's on our website. There's a whole page dedicated to it, or surety.org, I should say. And everybody can kind of take a look at that executive summary and some of the data that came out. of it.
And I'm sure a lot of people will be excited to hear that you're undertaking an update of that study and that new information will be coming out in the coming year.
Absolutely. I think it was something that, as that data got older, that it's something important. It's certainly a big priority for our board to continue that moving forward, because I think we got a lot of value out that in and of itself, right? From advocacy, education. Right. I think it gave all of our members a toolkit, right? To go in and say, hey, look, surety is important. Here's data that backs that up. So if you are on the fence about bonding your project, here's empirical evidence that shows that's real and it's tangible.
And I know whenever you update a study like that, there's a lot that goes into it, and it's not an easy feat. But do you have kind of a rough timeline when you might expect to kind of have the new updated study?
I would love to have something out in the first quarter of next year. The good news is that the first study was the hardest, right? Because you have to lay the groundwork, put together the survey, figure out the theories and the formulas. Well, we have that already. So while it's still going to be time intensive, it's a lot, like a lot of other things, it's easier the second time around. So I think not having a specific, my goal is to have that somewhere, in the first or second quarter of next year.
That's great.
Yeah. So we've talked a little bit about kind of the federal environment, and you've alluded to the states. What are you seeing at the state level, and what do you predict kind of going into 2026 on what the industry needs to do to prepare for the state legislative sessions?
Yeah. Well, states are always hard because it's such a patchwork and things come up, and state legislatures are not in session all the time. In fact, some like Texas are only in session once every 2 years. And so you kind of have to get into the steady rhythm of Texas, we're going to have issues in a year from now, but this year we don't have to worry about them. And then I think that sometimes you get state legislative proposals that you just don't know where they're coming from. And that's when education's key, whether they're changing bonding requirements. Nevada tried to move T-listing requirements for sureties to AM best ratings, and it's things like that. And sometimes it's just a matter of going in and telling them about why these are in place, and sometimes it's just going in to fight. And we have resources to go into a lot of states, but it's still difficult. And I think where we're coming at, so right now state legislatures like Florida are already pre-filing for the next legislative year. So we have a number of states that are already pre-filing bills and amendments that will kind of become more formal once we hit January. And it's kind of strange to think, right, that these legislative proposals are popping up in September, so they're kind of on the plate when it comes to January and February, and that's the hard part with state legislation. And we have tracking, so we have lists of state legislative proposals related to both surety and Fidelity sides. Yeah. The other thing I'll say is, because I think it relates to the states, is we are seeing a large increase in court cases about surety policies and kind of getting in the weeds and not, fighting over differences in language and how they want to look, how the courts are interpreting them.
Right.
And we've seen probably more we've filed more amicus briefs on behalf of the industry this year than I think we have we probably more this year than the last 2 years combined. And that's just through August.
Yeah.
And so I'm knocking on wood that we're not going to see more between now and December.
Yeah.
But if we do, that's, I think, another important part of how we defend the industry is going in from a third party, an industry-wide perspective to go and defend what our members are working on.
Yeah, certainly important advocacy work. And maybe listeners may not realize that we track state legislation as federal as well. And one of the important things is that the organizations exchange that information so that we can work in concert to blunt adverse legislation or to promote legislation that is favorable, and very important work that the organizations do separately and together. So,
correct.
Yeah, thank you for that.
Yeah.
What are some of the other trends that you are seeing for the industry? I know certainly, talent, workforce, you have the kind of aging demographics. Kind of where do you see the industry working to address that kind of an issue?
Yeah. Well, and I think the good and the bad news is we're not the only industry facing that, right? I think now is the time to start tackling that. And we have our one. It's great to see that our member intern programs are doing very, very well. I think this year for our foundation, we had 26 scholarship applicants versus I think maybe 10 or 11 last year, which is great because there's interest to go into the industry. And part of that is we give kind of bonus money out for interns who then decide to continue to stay in the industry. And we're seeing that. And some of our, what I'm pleased to hear from a lot of member companies is they do not have a shortage of talent pipeline coming out of college. And that's because their intern programs have those relationships with schools where they're coming in and building them up, right? And I think that's an important part of that. And I think just the mentorship programs and other things are also key to keep them there and kind of keep them in that talent pipeline so they have opportunities in those companies.
Right. And you mentioned that is through your foundation. Could you tell us a little bit about the foundation and how Surety professionals, if they were interested, could learn more about that?
The SFAA Foundation has been around for quite a long time, and it's meant to offer scholarships to interns within our member companies their junior and senior year of college. And then what the foundation board decided to do over the last couple of years is basically giving them another scholarship opportunity if they basically sign a letter of intent to go in the industry. So we're rewarding them for their continued interest, and it's been a great program. And we changed and broadened some of our scholarship language this year, and we certainly saw that in the much larger amount, I'll say, in terms of the scholarship applications that we got. So what we require for our foundation scholarships is certain GPA, accredited college, a letter of recommendation from the Surety, but most importantly, an essay about why they're interested in the industry and what they've learned. And I'm hoping that as those essays get down the road, that we'll be able to find some really good stories to tell about why Surety is such a great industry to go into.
And that's a charitable foundation, right? So contributions are.
It's part of it, but it's separate. It's a separate nonprofit foundation.
So I know this is asking you to forecast, and we won't hold you to this. But do you see the Q2 results? Do you see more of the same going into Q3, in your opinion, or do you think something will change?
Well, I would like to think that we're going to have another year of growth, and that's where we're seeing it so far. I mean, I think that the fact that we've seen premium growth in Q1 and Q2 at in the double digits, I think lends itself to believing that we'll continue to have a great year for premiums. I will say, though, and as you know all too well, is that there's a lot of uncertainty. I thought maybe we would see, businesses don't like uncertainty, and I think with the tariff issue going on, that there's been a lot of uncertainty, especially in Q2, which actually I think maybe surprised me with the premium growth a little bit. I think that there's going to be a tail for some of this. And so it'll be very interesting to see what the Q3 results are, and if we are finally seeing impacts on tariffs, or if people are kind of going through that and continuing to just drive infrastructure and construction projects. So while we have increased material costs, I think a lot of those construction projects are moving forward. But I think one of the concerning things, and we read it, every week in industry magazines, is that some of these long-term mega projects that may have started 2 or 3 years ago have maybe even doubled in cost.
Right.
And that's a concerning trend, right? Because we're seeing increased costs in goods and services, but also on the labor side. And there's certainly a workforce issue from a construction standpoint that I think is challenging to the industry.
Yeah, certainly. Yeah.
I say that all to say that, any of those factors can change where our performance goes, right, over Q3 and Q4.
Right.
And I probably do expect that loss ratio to tick back up. And we usually do towards the end of the year. Q2 is usually a little slower in that year over year. So we'll see where that trend continues.
Yeah. Well, I'm going to hold my breath for growth for the right reasons.
Me too.
And that will be interested maybe to have you back and talk about the next quarter results.
Yeah, that would be great.
Well, I really appreciate you all having me, and I'm cautiously optimistic about the rest of this year and moving forward. I think there's a lot of opportunities and growth. And, one of the interesting, I just saw this over the course of the past couple of weeks, but McKinsey came out with a study that said that there's going to be about $106 trillion in infrastructure spending between now and 2045. And if you think about that number, and that's global, right? And that everything from technology to infrastructure itself, I can't get my head around $105 trillion. But that shows
that's a big number.
It's a very big number.
That's positive because, it's not just the US, it's globally, right?
Yeah.
And to understand that all that funding is going to go on in future years is a very good omen for the continued growth of all of us.
Right. And for those considering a career in surety, it's a great time to get in there. Right.
That's right.
So,
That's right. Yeah.
That's terrific. Well, Ryan, thank you for being on with us today, and just keep those numbers coming.
I will. Well, I had fun, and I appreciate you having me on. So I'm sure we'll talk again. Okay.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just wanted to thank Liberty Mutual Surety again for their generous support in supporting this episode of Let's Get Surety. Liberty Mutual Surety provides contract and commercial bonds for all size companies and contractors around the world. Liberty Mutual is here for you today, tomorrow, together. For more information on Liberty Mutual's breadth of surety products and solutions, visit www.libertymutualsurety.com.